you. It's so good to see you all. Thank you so much. I appreciate you all so much. The actual members only stream, I the invitation I'm gonna put up again. This actual the members only link is a special invitation for just members, Bobby. But definitely make sure that you consider getting the information. Visit the website and we would love to. But right now, um, I only allow people that I know. But it is great to see you. So good. Thank you so much, Karen, for sharing with me. I'm gonna see if the we can make sure that everybody joins in. Don't let Karen be in there by herself. Come on. Get y'all nerve up. We're gonna talk about ETFs. We're gonna talk about money. Yeah, anybody else love talking about money and investments like Karen does? Like definitely members come on in. You see, there are people who want to come in. You have a great opportunity to ask me questions, and that's a blessing. I'm glad to see other people, really wanting to take advantage and get the information. That's why we do this. And on Friday morning, we always have our members only meeting. And don't forget, Bobby, there is an absolutely complimentary members option that is available for if you just want to do group participation. And in order to have our one-on-one meetings, that's where the actual membership comes in. So a lot of you have joined and you think that that really is all that you need to do. But for us to take the next step, I need you to upgrade your no excuse membership to the individual or family, or and make sure that you take advantage of all of the membership benefits of the one-on-one meetings. I feel the same way. I don't, I see another person. Mr. Taylor came in. Mr. Taylor, you're in the members only link for those who are members. After, we have to have a meeting and get you signed up for membership. It's good to see you though, and I'm glad to see them. You know what? I think that this could be because of the topic. What you think, Karen? Like people appreciate the topic, and it's getting them in. Mr. Taylor, definitely um, stay with us and watch. That would be great. So I am JB Bryan, President and Chief Investment Officer of JB Bryan Financial Group, the home of AfroEconomics. JB Bryan Financial Group is a registered investment advisory firm, and it is my goal to actually empower us, to give us financial information, to give us health information, to look at us holistically, because Afroeconomics is made up of 10 principles. And I was like grabbing the book. This is the workbook. The 10 principles of Afroeconomics include everything from planning your legacy. Some would call it estate planning. It's bigger than that for me. It's actually going through your whole purpose. So everything from legacy to accountability to organization to credit confidence to entrepreneurship. All of those are the principles of Afroeconomics. And then so visit afroeconomics.com. So today's topic is about exchange traded funds. Exchange traded funds versus mutual funds. And mutual funds are talked about all the time. We got two powerhouses in the studio today. Got Ms. Davis, we got Karen, we got Mr. Taylor, who keeps coming in. He knows he's not a member yet. I don't like know who you are exactly. So the I can't chance it, Mr. Taylor, but thank you, for your enthusiasm. And so we're going to talk. I want us to what do you think, Wita and Karen? Like, do you think I think that maybe 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 it's the topic. What you think?
I think it's a very interesting topic. I know it's something that I'm interested in, and I know it's something we discussed in September. Like Guido, you were discussing this also when we were all together in September.
Yeah.
So it's something I'm very interested in.
That's so cool. Yeah. And we don't like, can't talk enough. And I'm about different investment things. And I'm not, as a licensed advisor, it's important that I not like say, oh, this one's better than that one, but what I'm just arguing is that we need to know about all these things. And we need to, I need to admit that, first up, I do have a preference, but because as a registered investment advisor, when I establish my portfolios, I do focus more on exchange traded funds with every opportunity. But knowing that, Ms. Charles, there are a lot of people who work at companies that they only use mutual funds still. The exchange traded funds are new on the scene. No, so the mutual funds for a lot of people, I don't want you to feel bad that your job might only have mutual funds, but there is a difference between the mutual fund and the exchange traded fund. And as an individual investor, we just said coming back in. That as an individual investor, it's important for us to know, like, well, what's the difference? Why would I care? And a big part. So I'm going to try my best to just focus on, just first to say, exchange traded funds and mutual funds are both an opportunity for instant diversification. They're both tools that are taking your money, and they're actually investing your money into the specific contents of that portfolio. So every mutual fund and exchange traded fund would offer you that same opportunity for instant diversification. How they would diversify would vary from fund to fund, goal to goal. Every investment tool. So I remember back in the day when I would like do just a lot of investment of workshops just on the fundamentals, and it was only mutual funds back then. Think about that, 30 years ago, just mutual funds. And then I would say a mutual fund is an apartment building of investments, like you versus if you just had one tenant in a building, versus if you have a mutual fund, you have a whole bunch of renters in the building. So if one renter or one ingredient or one part of the portfolio goes south, because you have so many different parts, so many different participants, so many different stocks in there, so many different businesses in there, so many different units in it, so many different apartments in that departments in it, that it allows that one ingredient going bad to not knock everything out. So even if you're an apartment building, if one tenant doesn't pay their rent, you still will be able to pay your bills. But when everybody in there stops paying their rent, right, Ms. Anderson, then you have a serious problem. So with a mutual fund or exchange traded fund, they have all these different businesses in there, publicly traded stocks in there, and they have so many different. So I'm really kind of coming from a place of you having a basic understanding. We're not going to look at like growth funds versus growth and income fund versus aggressive growth fund versus an international fund. That stuff we'll talk about when we're on one-on-one. But we're going to just talk about them fundamentally, that a mutual fund versus a exchange traded fund. And the mutual fund has the advisor on staff. So they have managers. The mutual funds have managers on staff. So they have people on their staff at the mutual fund that do my job. So if I'm investing money for a client, Why would I want the client to pay for someone else to manage the money? So if I'm doing it, I'm going to get them into a position of the least amount of expenses. And a mutual fund doesn't offer that if it has a staff that it has to pay. I want my client to only have to pay me. So the exchange traded fund stops the client from having two fees, but it happens all the time. There's millions of people out there listening. And they have mutual fund, and they're also being charged a fee by the advisor for that mutual fund in there. Hopefully they have a particular reason why they have to have that mutual fund, because part of my job is to invest your money the most cost effective way so that we get the maximum return, right? I want you to get the highest return. So if you're going to have an advisor, because we're trying to outperform, we're trying to do better, I'm trying to create that alpha, I'm trying to make you money on your money, like then that is the reason to have an independent advisor. But if you're limited and you have the advisor, and then on top of the advisor on the fund, you're just paying over and over. And some mutual fund fees could be 1.5%, or more. I've seen some people paying charges on mutual funds over 6%. So it's, that it's time for us to, really, and that's a lot, a lot of my job sometimes is the person doesn't know what they're doing. They don't know what they're currently invested in. So because they don't know what they're invested in, just relax, Wita. Just chill. You ain't got to do nothing else. I got you. Right, Karen? We just see all you got to do. That's it. Like she been running. You fine now. I got you. I got you like I got your money. I got you in the good hands. What does Nationwide say? You're like blue fingernails and everything. I got you. So if you want to be God and then you have an advisor that's working with your account, then we can avoid the mutual funds and save money. And that could be extra money for you and your portfolio. And over time, that mutual fund could be costing you thousands of dollars because you're paying the extra fee. Mutual funds also, if they're in a taxable account, you could be incurring additional taxation that many exchange traded funds are able to avoid. Exchange traded funds have created a process where they can delay the capital gains that you have to incur until you decide to sell that fund. Where on mutual funds, they pay out capital gains quite often. And this is on a non-retirement account. So if the person just has but if we are on a retirement account and it's growing tax deferred, then it doesn't matter the taxation on the account. But if the person has money and it's in, like I had a client and he and his wife have quite a bit of money. And when I switched them from mutual funds that they had that were underperforming, so the person was charging them a fee, plus had them in quite a few high fee mutual funds. Like I didn't even think about they were incurring, and I hope that he's listening, they were incurring additional capital gains that they will not incur now on that account, or at least reduce the capital gains a lot because we're now in ETFs. Definitely, ETFs are rated by Morningstar all day long. As a licensed investment advisor, those are the type of tools that I use. So when I'm looking for a 5-star. That's what I want, and it will also give you the information that you need on the fees, as well as I have additional software with the risk tolerance portfolio, and then I can, even if that when I'm putting it together using that, it will it doesn't pull in the Morningstar, but it pulls in all of the expenses on each fund, so I can compare what you have to what I think you should be in, and how this is going, how over historically you are doing so much better. And part of that is because if I'm able to reduce your expenses and you looking back, because I cannot project the future, but I can look at historical performance and show how you could have done better. That's sad, isn't it? But nobody licensed is going to give you anything that is going to project the future unless it's a guaranteed account. Like we could do something like that on annuity, where I could say it could tell you you're guaranteed, and it could tell you your minimums, and life insurance will say that. But on investments, how the hell do we know? So if they tell you this investment is going to do da 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 in the future, then you should eliminate from talking to that person immediately, because they just broke the law. All we can do is tell you historical performance and pray for the best. You have a tax efficiency advantage with ETFs. You have a low cost, reduced fees advantage with ETFs. You have the power of diversification with both the ETFs and with the mutual funds. And it definitely, both of them give you the opportunity to reduce your risk compared to just owning individual stocks. Yeah. Most exchange traded funds I know that I have ever put a client in disclose what they're holding basically daily. They have to, say what they're holding, where I don't think mutual funds have to update their holdings daily. And I've seen a lot of mutual fund companies now, interesting enough, some of the rock solid old mutual fund families are now coming out with ETFs because they know so many assets are moving that direction. So you're going to see more and more 401ks hopefully moving towards having the ETFs available for clients. I have seen a few and have been able to set up portfolios at work accounts using the ETFs. But and it's because more and more work accounts are now getting registered investment advisors to help the employees. So the employees have someone on staff. Good afternoon to you as well, Seth. And then, so tax efficiency is something that, definitely a good advantage. But also, the ETFs allow us to trade, buy and sell throughout the day, where mutual funds generally are only sold once a day at the market close. So even if you call me and you sell a mutual fund at 10 o'clock in the morning, it's not going to do anything. And you're not going to know what you sold it for until after 4 o'clock that day. Where an exchange traded fund, I can sell it and buy new and everything throughout the day. But you're going to know exactly what you sold it for immediately. So it definitely has a lot more trading flexibility. We can, that you could take full, it trades like a stock throughout the day, but you are trading your diversified fund, your exchange traded fund, where the traditional mutual funds only trade once a day at the market close. And I'm going to say generally, because it's, always something out there where I'll say, well, we trade 2 times a day and and because of the a key feature is that you're going to have more transparency with the ETFs on what the contents of the account are. They get their update. The ETFs are updating their holdings every day, where their mutual funds are not updating their holdings that often. Generally, it's once a quarter. The costs, any management expenses with exchange traded funds are going to be lower, and that is because the ETFs, usually they're not managing anything. It might say this particular exchange traded funds has the 500 largest stocks in the US, so they don't have to do anything but just make sure that the 500 largest companies in the US are in there. It is my job to have different ingredients of the portfolio using the different ETFs. But you could get a mutual fund that actually its job or its goal is to outperform the 500 largest companies in the US. It's trying to outperform the S&P 500, the mutual fund itself. For a stock portfolio, that would be my goal. But it might be that the benchmark that's closest for that client but I don't even want to go that direction. What I was going to say, like, make sure that you're comparing apples to oranges. So you can even have a blended account that has bonds and stocks in it. Then you're comparing the performance to stocks and bonds as an index. But your typical exchange traded fund is mimicking some index. It might be a small company index. It might be a large company index. It might be a mid-sized company index. Like there, or it might just have the gold in that ETF or silver in that ETF. Like, so it's going to be so simple. But I have found, like, if the ETF involves more work than just getting the first 100 of that index or the first 500, if it starts getting deep and it says, I want the top 25 of that 500, then your expenses are starting to go up because you're hiring somebody. You're getting that fund to do part of my job. Am I making sense? So the more it has to do, or if it's ETF and it's just for international, it's going to have a little bit more expenses because they're going to have a lot more things. They have more things that they're having to do. They might have to exchange currencies and all this stuff. So not all ETFs are created equal. Not all mutual funds are created equal. There'll be some mutual funds that have much higher fees, like I was saying, than another mutual fund. There might be a mutual fund that is considered a no load, but that's still not an exchange traded fund because it's not going to be trading and it's not under the same regulations. It's not going to be trading throughout the day like an ETF would. So a no load, yes, lowers your expenses, but it's not the same as an exchange traded fund. Glad I said that. Because if you're only thinking about the fees, then yes, then the no load would be similar, but the no load would still have a manager if it's a mutual fund. And so some key advantages of the exchange traded fund over a mutual fund. And since the exchange traded fund, I'll say that because it's the newer one. So how did it come about? Because they wanted to basically provide lower costs, and they wanted to help advisors. Exchange traded funds were basically created for me. They were created to let me be able to do my job more effectively with lower expenses for my clients, benefit the large investor. But now ETFs, if you're at the right place, like, an AfroEconomics member can buy one share of an ETF if that's all they had and they were a member. No. There's some places that will allow them to buy partial shares, but when you start doing that, you're paying fees. You're paying expenses. You're paying things like I I would prefer to see people save their money, get the discipline of saving. Because a lot of times the person, if they can't, because investing in ETFs, it's not a savings account, it's an investment. So if they start like just being transactional and you're paying all these little fees because they're letting you buy one share, half a share, quarter of a share, this or that, and then every time you need $100, you're selling it. So if you made anything, you're creating a taxable event. If you didn't make anything, then you just threw away money. And they're doing it. So it's like the way that these apps, unfortunately, is not good for people's mind because it makes them very transactional. And investments take time. I don't care what you say, the people who end up really building wealth over time have discipline and they give their money time to grow. And you have to give yourself time. So, like, no matter what, you want to make sure that whatever investment, the ETF or the mutual fund that you get, that it is suitable for you and your investment goals. Like, really think about your risk tolerance, what you're buying, what you're spending your money on, and not just some commercial that was ran or somebody told you to get that. That's really not how we should be making an investment decision. So if you focus first on making sure you get your debts paid off, make sure that you get your emergency fund together. And then we have these questions like this: ETF versus mutual fund. Which one do you think I should do? And da 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 da. But thinking that these things are a savings tool is the wrong perspective. No matter if you're using it that way or not, it's the wrong perspective. We don't want to do like that. Don't put out names like that, but there's no way to take it down. But are ETFs all by itself I don't know. What's the question? I don't understand.
All right, can you put me on speaker?
You are.
Okay, so like the ticker QQQ, I think that's an ETF. Without looking, I think that's.
But I don't want to do stuff like that. I'm licensed, so I can't do stuff like that. I shouldn't be saying products. So we don't want to say products, but ask your question. Ask your question. Okay. Yes, that is. Yes, that is. That is an ETF.
So would that sit in the S&P 500? That's what I'm asking.
No, it's totally different.
Okay.
QQQ is actually the Q came from NASDAQ. It has absolutely nothing to do with the S&P. So from that perspective, it's a great question. Because remember, I was saying most ETFs are based on some index or something, like QQQ is for NASDAQ, and the S&P 500 has its own, a whole bunch of ETFs. Are based on the S&P 500.
But like for the kind of like for, let's take Coca-Cola as a stock all by itself.
That's right.
And the ETF, I think it's QQQ. That's as an example. That would not sit. The QQQ would not sit in the S&P 500 like a Coca-Cola would sit in there. Is what I'm asking.
A ETF does not sit in an index.
Okay.
That's right. Okay. That's right. That that QQQ is just a symbol for an exchange traded fund. In the S&P index, it's only individual companies. That's right.
Okay.
I'm just saying it this way because I don't want to show any preference to anything. Yeah.
Well, that's why I put that word example up there.
Exactly. Yeah, exactly. But unfortunately, some people, even if you give an example, it creates curiosity. They assume that means it's good for them, and then they, so we are not soliciting or encouraging any particular products during this time. That is not what she meant. She
Yeah.
was not showing preference. It was just a question.
So get whoever that is, get that out of your head.
Exactly.
Not what I meant. And it's on record that I didn't.
Amen. And investigate for your own suitability what might be best for you. She is not endorsing, nor is she discouraging any type thing. That's right. Oh,
Okay,
that's
we
great.
put the disclaimer out there. We got it.
That's right. That's right. That's right. Yeah, because but good point. Because I would never think that. I would never think that what you said, and it's very important because a lot of times you don't know. It's kind of like when the doctor comes into the hospital room and they're using these big words instead of like. So sometimes I'm using words that. And I don't realize it. And I really want to make sure that I'm communicating that. And I'm glad that you asked, like, what would be in an ETF and it is an ETF in an index. But I've seen like there's some interesting things that are going on. And then yesterday I was reading about a new ETF because now we have like more and more ETFs that are coming out with cryptocurrency. You've seen that.
Mm-hmm.
And then like, so now they're in delay. And then, individual, they're, struggling at this point, but it's going to be interesting to see. But ETFs do allow an investor to put cryptocurrency in their retirement account if they wanted it. And I think that a lot of people who do not have an appropriate risk tolerance and the crypto is not even relevant, appropriate for them, they're investing in it. And I love the fact that my clients ask me about it. Like they ask me if they're thinking about it. And I have some clients who don't want to talk about it. And I have some clients that do want to have a greater understanding of it. But when you're talking about something as aggressive as that, our community needs to be very careful and understand about, okay, if you want this, they need to at least know. And most people don't know that they could be talking to an investment advisor like me about doing cryptocurrency. So it would stop them from having to go through a lot of unnecessary organizations. Am I making sense? Like now you don't have to go to the group that's meeting on Thursday night, and talk about it. Like it's not like that anymore. This is a regular available product option like any other investment. But we are, as a community, unfortunately, still buying it through the worst sources. Like I had, as with like other assets, like with, gold and silver. A client asked me about like some signing up for some program where it was buying gold. And I was like, you don't have to do that way. And she said, what? And I was like, no. I was like, I can get you in this. And I put her in, something that was appropriate for what she wanted to do. And she has done well with it. But she thought that she had to buy it through this, all these expenses paid, all of these hard trying to get it back out. You know what I mean? She didn't have liquidity, didn't have access, had no historical performance, was not regulated. You know what I mean? He's doing all this off the cuff. We don't have to do that. You have someone licensed, but the majority of people who talk to our community are not regulated. So they're not licensed. And we're just talking to them and then they're sending you somewhere else to buy it. And go over there and talk to, them about it. And they use them as a front, to get to us. But at AfroEconomics, thank God, by the grace of God, I do it. We do it all. And it's based on your risk tolerance, your risk level, your financial goals. And it's about helping you understand what's the difference between the exchange traded fund and the mutual fund. Why this is good. Yeah, we have to stop getting robbed, stop allowing ourselves to get robbed. Stop thinking that there's somebody is telling you about something that doesn't exist. Like, you know how we just feel like, you know, we know this is on the cutting edge, and that's why, you know, your advisor didn't tell you about it because this, you know. But a lot of times I didn't tell you about it because it's bullshit. It's not appropriate. It's garbage. And if we saw all the garbage that has come by me, and I've seen people go to jail, I've seen people go to jail for stuff they were trying to tell me, oh, this is great for your client. This would be great. If they could get access to you all through me, it's sad. I'm just so thankful that I'm very particular, very hard. Y'all know how I am. I don't trust anything. No, but that's the way we have to be about our money. That's the way you have to be about your future. That's the way you have to, you know what I mean? You got to get you get you a gatekeeper, get a gatekeeper who's regulated, who has to follow the law. If they don't have to follow any law and they don't have any rules, then you don't have a gatekeeper. You just got a gate wide open. I'm a gatekeeper because I have a legal responsibility to protect you. I have a legal responsibility to be careful how I describe an ETF versus a mutual fund. I have to make sure that it's all in your best interest. That's right, Ms. Anderson. Thank you. I don't know why her microphone is so loud. That's interesting. You hear how different it went when I turned that off? Like, boom. Yeah. With the little empty chair, she couldn't sit there for nothing. Good for you, Miss King. You are a good, good, good student. And I love your sweater. Exactly. Oh yeah. See, you sound good. I don't know why.
Oh, you can hear me? Okay.
Yeah, great, beautiful sweater. Yes, indeed. So
It's
before
cold in Florida.
Are you serious?
Yeah, it was only like 40 this morning. It's cold.
That's cold,
But in
right?
Minnesota, it's below 0.
And it's 20 something here in Virginia. Girl, 40, we would take it. But 40 was cold though. I know it was cold. Yeah. Wow.
Maybe a high of 70 today, maybe, but it's cloudy.
Pulled your sweater out. So we have flexibility. We can get in and out quickly with ETFs. Mutual funds sell at the end of the day. Like, you know, Miss King, isn't that like something you really never thought about? Doesn't that sound like,
no,
you know,
I didn't know that ETFs trade throughout the whole day and having a financial background. I didn't know that. So I have learned quite a few things in this conversation. Thank you.
That's so positive. Yeah, we don't even like think about it. We don't even think about it. We just know we're getting out. And a lot of times you'll call a mutual fund and some of the companies, some of the employer plans will say like, we'll sell it tomorrow. Like, you know what I'm saying? It's like that when things are getting faster and faster, like I can do a trade and I'm settling the trade the next day nowadays. So like technology is amazing.
Now T+1 instead of T+3.
Exactly. I didn't see your ETF question. Oh, okay. Mr. Barber said, aside from, let me see. Oh, my chat up here. I'm gonna find you.
It says, aside from having a 5-star Morningstar rating, what are ways to assess prospective ETF options?
Call JB Bryan. Yep. And they I don't know if it's easy for people to get to the real Morningstar rating, because I know I have to spend quite a bit to have access to it. But like you probably can find out the rating, but you don't get the Morningstar report. I have access to the whole report and the basis for the rating that they gave, and I think that I do feel like we do have a lot of information now. Like if I were trying to choose something, you have to know how to ask the question. And you know, I might put in like, what is the top performing growth, if I was looking for growth, long-term growth ETF, you know, and then it might most likely give you the one that spent the most money in marketing. That's the challenge with that. You're not going to literally get that. Am I making sense? Like, you know what I'm saying? Because now with our searches, they give you based on which bank or which institution paid the most money to get in there. So if you say, what are the top ones? You know what I'm saying? The first ones are going to come up with big companies that paid for it. And it may or may not be true that they were the best performer. And the best, so mutual funds for that type of person, I would say our mutual fund might be their better option. Like, because to get a mutual fund, a good company, a good family of funds that has a trusted long-term history, and then they might do better because they're out there by themselves. Mutual funds have managers. So if they're just going to buy something, I think they're better off with the mutual fund. That's the market. That's why mutual funds still exist. Does that make sense? Mutual funds have a person like me that works for the fund, that does the fund, where ETFs, there's nobody working there. So ETFs were designed for me. They were designed for me to pull them in to make portfolios from them. Mutual funds are not actively managed. Like mutual fund is actively managed. The ETF is, at its truest, lowest expense, it is only to give me, if I want the S&P 500 included in my portfolio, that's all it's supposed to do, is give me access to those 500 without me having to buy 500. And then I want some exposure to mid-sized companies, so I get the ETF for the mid-size. If I want some exposure to international, and I get and it's my job to get the correct percentage based on the goals and the risk tolerance of that client. And if I want some bonds in there, then I get that ETF. But the ETF will not manage at all. That's where I come in. I might say 10% this, 20% this, 30% that, 10%, but that a mutual fund, that's what they're doing. So you say growth and income mutual fund, that's what he's doing. So it makes no sense for me to get a mutual fund in your portfolio when me and that person are doing the same thing. And you're paying for him and her at the mutual fund, then you got to pay for me too.
May I ask a question?
Sure.
So let's say we put our portfolio together. I work with you and we put together an ETF portfolio. When we have our monthly one-on-ones, is that when we discuss that portfolio? Like, when's the right time to check in on ETFs?
That's
like
right.
How they're doing, their performance.
Because we meet monthly, we do talk about it monthly, but that's probably too much. I mean, that doesn't mean we'd be making changes every month, though. You know what I'm saying? But but we'd be going just assessing stuff. It might be, looking at your tax situation. It might, whatever, the same. But yes, because I meet generally so frequently. No, mind you, I have, some clients that I have to beg to meet. Like, they just are not meeting like they should. But but at least once a quarter, I think it's appropriate for us to talk. But there are definitely some advisors who only talk to their clients once a year, like, and they're getting paid every quarter.
And they're jealous of you that they don't know how you have topics to discuss with your clients every month.
Every quarter.
I use myself as an example that they said to me, you talk to your advisor every month. What in the world do you all talk about? We talk about everything. Loans, taxes, credit, debt. We talk about cars, life insurance, everything. There's plenty to talk about if you're willing to have a conversation.
Amen. And that's the way it is for rich people. Like, that is exactly the way my career, registered investment advisors, that's what it was created for. For, rich people to have discussions with this person. Like, there's some people, they're with that person, they have their advisor with them every day. in our community has become like very transactional and doesn't feel worthy of the help. And that's really sad because we are, worthy. And if you don't take it seriously, we don't get it. Like you said, people unfortunately will accept, whatever we settle for. Yes, indeed.
Hello.
I'm with you.
Okay, you had me muted. Okay, so let's go back to like specialized funds, for instance, gold and precious metals. I'm on that side. So, all right, do we have ETFs that are precious metal and gold oriented and that kind of thing too? Like we have specialized mutual funds.
Yes, definitely.
Okay.
And you have, I'm pretty sure you have some, like at least one. So but not to say too much.
Yeah.
But yes, there are, and the ETFs do a good job at that, and mutual funds do a good job at that. And it just, they just have different ones. Like there's some gold ETFs that actually hold gold. Then there's some gold mutual ETFs and mutual funds that only hold gold mining companies, like companies that do gold related business. So it's not all created equal. Mm-hmm. I like the ones that actually have a gold reserve,
I know.
But I take that back. Generally, I would like that, because that's what the client is looking for. So if I'm comparing it to what they're actually looking for, it would be misleading, me to put them in something that is not actually have gold when they're telling me I'm looking, you know what I'm saying? When they're like, I'm about to buy a bar of gold. The only thing that could replace it is something that buys bars of gold,
I know in my portfolio, I'm in gold something. I'm guessing it's an ETF.
Tell us everything.
No. Well, it's gold something.
I can't tell, but you can tell wherever you want to go. That's right.
Other question. So let's say the ETF is no longer at a Morningstar 5 rating. We would drop down to 3, perhaps. We would drop that particular ETF and move to perhaps another one. True or false?
It don't happen to me, but yeah.
Oh, exactly. Well, look,
that's right. But if that happened to me, that's right. I can show you everything you got right now. You would still see 5, 5, 5, 5, 5, 5, 5. I
love that.
5, exactly. Exactly.
So you only zone. I'm very new to ETFs. You only zone in on 5-star ETFs.
Yes.
Based on the risk portfolio of your client and where they may want to invest.
That's right. That's right. And something could still stay a 5 and not perform well. Like it could, say government bonds. Government bonds are just out of favor. You know what I'm saying? So if they're just out of favor, but they're still better, like they could be down, like that bond fund could be down 5% and all the other ones are down 20%. You see, so it could do it would have a better it could possibly have a better rating, but so a lot of their rating and ranking comes into play with like the longevity of the manager, how long the manager has been working at the fund, how stable it is, their choices, their strategy, the respect that their analysts have for their strategy, but they're comparing apples to apples. So even though that sector might be doing poorly, it could be the best performer in that sector. And, in all honesty, like there's going to be changes. And that's why it's important to just stay on it. If I had a fund that slipped from like to a 3 or 4, that doesn't mean that I would say, oh, Ms. Davis, you should get rid of it. I would first want to know why. And it might just be because that whole aggressive growth sector is just doing poorly. You know what I'm saying? It doesn't mean that it's just a bad investment, but it might not have anybody. Like I would have to compare that whole sector of what it's representing, and 3 or 4 might be great because everything else got 2s and 3s. So it's not really fair for me to say like everything has to have a 5. Like, if it's just biotech is out of favor, and they're suggesting that you don't have biotech, we either need to switch. But if the client is like, I gotta have biotech, like, then I'm going to try to get the best in that sector. And some could argue that, there could be a client that's just contrary and they go, I like stuff that's out of favor. It'll be back. And we just have to pray that, it does come back. Like,
or they could be like me, I have an emotional attachment to 3 things in the portfolio.
Oh, your little investments. Yeah, your little stocks. Yeah, and they just want to hold on to it. Like, yeah.
Yeah.
It's true. It's true. I think like, I don't know. But if I said, I would say that women tend to be more emotional, like will get an emotional attachment to things. Like, like if I say, oh, ETFs will save you money, that's enough for a man. A woman, she's going to want me to be, now I'm saying not everybody, but a woman, she's going to be like, well, wow, I've always had this. My grandma had these, it's always we had these mutual funds. Like, mutual funds are the greatest in the, the whole world. I won't have to go through that. Like, you know what I'm saying? The man is just like, I just want to make money. Just make me money. I'll get over it. I know my dad had that, but you know what I'm saying? We're going forward. But I mean, I have like women who still are stuck with $1 million in their company stock.
Oh, and that's crazy.
And I could have tripled their money by now. Yeah. And they just will not switch. It's what they know. They're stuck with what they know. You know what I'm saying? And it's like,
well, we'll take some of it out. I mean, you can still keep it, but takes.
Woo, and exactly. He said, Herb said, yeah, the struggle is real. Like, but it's, and then we can't, and you have to be very careful how you say it. Like, I remember one time there was this lady and she was about to do like something that was going to really get her on her taxes. And I said, I just want you to sign that you realize the tax penalty that you're going to get for this. And she was so mad, like that she just spent all her money because I was actually asking her to say, I realized that I'm gonna get penalized, you know what I mean, at taxes, which that has nothing to do with me. I'm only looking out for you because I just want you know what I'm saying, to realize this. But like, she was ticked. So you know what? Just give me it all. Just give me it all. Who is that hurt? Who is that hurt? Like, so I'm glad that you mentioned that because, like,
sometimes we have to sit in the advice that we receive.
Amen.
We don't have to have a knee-jerk reaction and respond right then.
It could be that we're more like this because of our corporate experiences. Like, all 3 of us are corporate. So we did, but at the same time, I know that there's a lot of women that would be like, yeah, I don't want to hear that. Like, I was telling someone the other day, this lady got mad at me because she was telling me, a family member was telling me about a problem. So I gave her a solution. And she said, I didn't want a solution. I just wanted you to hear my problem. She was like, very. And I said, oh, I'm so sorry. Like, I solve problems for a living. Like, that's, what I'm saying? That's all I can do. Like, is solve problems. It is so hard for me to just see somebody miserable and know what's, I literally feel that that's a sin. But there are a lot of people who just can walk right on by. You see somebody miserable. Like, if I see a person on the side of the street, like, you know what I'm saying? And they need something, I'm looking. Generally, I don't have any cash, but I'm looking. And if all I have is a 20, they getting that 20. They getting it. If it's a 50, you getting that. Because I'm like, I'm going to try to solve this problem. what could I do get you off this corner? But it's like part of the soul. But like you said, like it takes them having the patience to realize like this person has my best interest. I remember it was a lady that was, because I'm regulated. So the regulator came in and she said, you don't realize your value and you don't charge enough. That's the regulators say this, you know what I'm saying? This, and the white lady, like basically I was hurt, like a part of me was hurt, like that she saw me. She saw like that you're not your, and then she was like, I just don't know why you do this to yourself. Like why you're putting yourself, like why would you know what I'm saying? And I really never realized. And after that, I'm telling you, I totally restructured how I did business. And that still catches up with me sometimes now of just, undervaluing. But I think that a lot of women like just don't see, and we haven't been socialized to see our value and to see your potential and see all that you could accomplish. Like, that, and when I see it, I see all that you can accomplish. I see how much this money could grow to, like, and that lady, she saw the impact that I can make and the struggle that I was going through that I didn't have to be going through. And then but I thank God for her. I was hurt and it made me reflect. But like you said, sometimes we just have to sit in it.
Yes.
And she made me change my process. Yeah.
Okay, Lone Wolf.
What did he say?
Where are you going to be at when you leave the broadcast? Got my homeless outfit. I need $50.
I don't have the $50. I tell you, if I had it. Exactly. I don't have it. How you doing, Mr. Walton? It's so good to see y'all. Like we are, but I want y'all to like listen. If you're coming in now, I want you to go back, listen into the ETFs, the pros and the cons. There's a versus the mutual fund. How now we have exchange traded funds out there, many opportunities, but they really are designed for portfolio development. In my opinion, like a mutual fund is designed for an individual investor to get, a markup on their price, to pay a little bit more, but it is a managed account. That makes sense. Like, that's a valid like argument that we still need both, because why I don't think everybody is confident enough to talk to me. Like the point of AfroEconomics is to give access to an advisor to everyone, but I just don't think everyone's going to do that. And then that's how it came into work. All of the work accounts, right? Like you didn't have an advisor. You didn't have advisors at work. Many work funds don't have advisors. So when you're using mutual funds at work, because they have advisors on them, nobody that you can really talk to, but still there is a money manager for every fund. And you can look at their historical performance, and yeah, they do get a rating and a ranking, and at work. But if you join AfroEconomics, and no matter what they have at the work fund, I can help you. If you do a real membership, I can help you set up your allocation at work. It makes a big difference. It makes a big difference in your lifestyle over time, getting the right advisor to help you with that allocation and maximizing your money. Research has shown that women save more, but they don't go and get the investment returns that they need. So even though they save more, they're not making as much money on their accounts. They're not taking the risk. So a man can save less, take more, have smarter investment strategy, and come out ahead. So we just think, save, 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 but we should think save and return, save and return, save and return, and avoid that debt. Any questions? Okay, I'll turn you off. I'm gonna turn it. Yes.
Explain what it means when we say in-kind contribution, in-kind distribution. What are we saying? Bring the money in as it is? What is in-kind? What does that mean?
If the term in-kind is used a lot, but if it means the same kind. Like there'll be, if you're doing an in-kind distribution, then you're actually distributing the actual shares of stock. If you say a cash distribution, then we have to sell the stock or sell the ETF and send you cash. That would not be in kind.
So in kind, you would get stock certificates in the mail.
Amen. Or you wouldn't get that. Nobody's sending out stock certificates anymore, but that's exactly what happens, but it goes to your other brokerage account. Now things have to go.
But say that one more time. Give that, because it just kind of went over my head. One more time.
I said nobody's sending out stock certificates anymore. I don't
care. No, I mean the definition of in kind. You said
it's like for like, like for like. So in kind exchange is generally what you would see, and it is, or a cash exchange. So like, or a cash rollover or in kind rollover. Like say a client has stock and they were doing a rollover and they had company stock, 10,000 shares of company stock. Mm-hmm. And then my question or the form question would say, do you want these shares in kind or do you want them in cash? And in kind would mean I'm transferring over electronically the shares.
Okay. Yes, that would be like a rollover coming from another company into,
That's right. In kind.
That's in kind.
Or we can liquidate it all and do a cash rollover. That's right. Good. Ooh, okay. I don't know where that question came from, but I'm waiting for it. Bring it on. We're gonna do.
No, it was something I've been wanting to ask for a minute.
We're gonna say everybody out there do that in kind or cash. We'll take it. Transfer all. That's right, in kind or cash. So really, that's a good point though. Some accounts, some brokers, or some people aren't licensed to accept stocks. So they would make the person have to cash it out because they can't accept it. My clients have the privilege of we can do in-kind transfers and take the stocks in. But if a person were transferring from a brokerage account and they wanted to do in-kind, but they were switching over to a mutual fund company that doesn't take stocks, they would have to liquidate. And a lot of times they didn't want to do that, but because they don't know me, they didn't know they had an option. So they traded it.
Because when you liquidate, that then becomes a tax hit.
I know that's right. Unless it was a retirement account, you know what I'm saying? Then it wouldn't be a tax hit, but tax hit, but if it were a non-taxable account, because on transfers, it's all about the dollar amount. But yes, for a regular brokerage account, they would do that and pay taxes, and they didn't really have to if they wanted to keep it. Correct? Right. Exactly.
Well, I brought in like a pension and put that into the brokerage, I think. And then I was told you got 30 days to do this. If you default on the 30 days, then there's going to be a huge penalty. Or if you go cash this check and hold back 1 penny of it, there's going to be a penalty behind
it. On that penalty, though. Only on that penny.
Mm-hmm.
Yeah. But yes, we shouldn't be doing anything. Don't sign anything without talking to me.
Well, that was
years
before
ago.
I met you.
Oh, yeah. Okay. That's fine.
But I was within the 30-day time span. So it was
good. That was a statute of limitations.
Yeah, I mean, I ain't gonna take all the money and cash a check and go get high or nothing like that. No.
Good. But you don't. Unfortunately, I have known people who have come into money and died within days.
Mm-hmm.
And they said, I got this money coming in. I'm going to come see you. And they never made it to my office and died over overdose. Several, I'm telling you. That's sad.
Ooh.
Some people cannot handle that kind of access to money. It's sad.
Mm.
One person, I sent them money because they needed to get a car. And they were like, I'm going to invest the rest. I would get right back to you. And they never did get that car. They got drugs. And we think like people with problems like look a certain way. You know, yeah. These are corporate issues. Yeah. Yeah. We gotta like really take care of each other. I mean, but to be able to say that has happened several times, that's really sad, isn't it? Like, yeah, Miss Branch, I hear you, Herb. He said, my risk is crazy work. Yeah, you do. I can tell that you have a very high risk tolerance, but you also have a lot of discipline, and you're accountable. You're the type of person, if you did something and you lost, you didn't win, you're going to take the hit because you did it. You thought through the decision. No, discipline becomes so much more important the older that we get. Like, we only think of like discipline, we think like it's only important when we're young. But as we get older, it's so much more important because we have so much more to lose. We have so much more to lose. Like, you ain't really had that much. You're young, you can start over and this and that. But when you get older, it's like, nah, we really have to have that discipline and understand like that. Look, the worst thing that could happen is we live a long, long time broke. Right? Dying is not the worst thing that could happen. Right? Yeah, I enjoy it. But isn't that interesting though? It is really true. A lot of people be like worried about dying. I'm like, you don't have to worry about dying. You ain't got a problem in the world when you die. But it's true. Like, that is not, we have to be focused on living well, taking care of ourselves well. Oh, it's so true. Like, like just keeping our mind sound so that we're making intelligent decisions. To ETF or mutual fund, neither matter when you're not making rational decisions. It's a great discussion. And the fact that we're interested on things on this level is beautiful. But the majority, we have to realize, people will not sit through a discussion talking about something like this. That's what I was thinking about. Right?
I liked it.
Yeah, but that is rare. That's rare. That's rare. Y'all go have a great, great day. I know if you have any other questions, I'm here. I love it. I thank God for you both for asking me questions, for saying that you're being under the gun like that, looking beautiful. I swear, I thank God for you both. It really helps my time go by so much faster than when I'm just sitting here, like, just trying to think of what might matter. Yeah, what's her say? I'm getting older. My brain doesn't work as good, and everything is getting more complex. Yes, it is. And your brain does work well. Your brain does work well. You know what really helps too is those omega-3s. I found in a vitamin the other day, omega-3, D3, and K2, all in one oil.
Oh.
All in one oil. Isn't that good? And it tastes just like fish. I'm gonna take it as soon as I finish. I know those omega-3s.
They make you burp.
Right?
Those fish oil pills.
Right? I did it one time and I went to do something. I think I walked or something afterwards, right? Oh, girl, that's so true. But But keep those omega-3s and keep that oxygen flowing and keep getting that fresh air every day, Herb. Like we have a lot more in our mind, like, but your mind is doing great. And I'll tell you one thing that kills that brain is like having elevated blood sugar all the time. Stay away from the carbs. Stay away from the carbs, and let's have gaps in between our food. One that's helped also me feel better in the head has been to stop eating at like 3 o'clock. You know, just don't eat. Don't eat late. So thank you, Vicky D. No, you were doing fine, Herb. Look, Kara's like, don't say nothing like that to JB because she's gonna solve the problem. I told when I say I'm gonna solve the problem. Oh, your brain, bro. I got you. Take the D3, take your omega. She's like, you're like, Lord, did I not tell y'all? I can't help it. God makes us the way we make it. I love y'all. Have a great day.
Thank you, JB. It was a good discussion. Love you.
I'm so glad. Thank you. Love you more.
Right.
Thank God for you. Thank you
Bye.
so much.
Love you too.
Bye-bye now. Take care. Bye.